Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, April 10th. We got basically just one economic news release today, and that is the Fed minutes from the March 20th meeting. I made a mistake or error yesterday. I was thinking they had, for some reason, my head must not have been on, but I had said that they're having their meeting yesterday and they're giving an announcement today, but it was actually the Fed minutes. So my error, and I apologize for that. But the Fed minutes came in today, and basically it actually surprised the markets because typically it's released at 2 o'clock East Coast time, 11 o'clock Pacific Standard, and today they announced it at 9 o'clock West Coast time, 6 o'clock, 9 o'clock East Coast time, and 6 o'clock. And that was because apparently some leaks got out a little bit earlier, and they just figured they would officially release it sooner than later in the day, which kind of got the markets kind of started early this morning. Not a lot new, in there. They're just kind of skeptical about the jobless, where the jobs are going. They're thinking that maybe it may not be as strong as they're originally thinking. They're also so they're going to be watching that. And this is also prior to this last, obviously report. So it'll be interesting for the next meeting what they say about where jobs are at. Also, there's been a few people on there that kind of disagreements on as to how maybe to get out of the kind of easing 3 or how to handle it, if they should start easing sooner than later, stuff like that. So some little divisiveness in there. So things to keep an eye on going forward. So let's jump over to the headline news here. And currently the stock market's up. And today also I saw that China posted a surprise trade deficit. So not huge news or anything, but it was just kind of surprised that typically we see China, usually having huge surplus in the trade side of things, and this time they actually had a trade deficit. So, there's speculation in there what was on this, that perhaps maybe manipulation of numbers to show other people, or perhaps maybe there's those shipments coming in treated as exports that'll be reshipped as imports later on. Stuff like that. So it'll be different, imports coming in as well as exports going out later on. So it'll be interesting to see how this plays out. But anyways, just thought I'd throw that out there for you folks. Let's take a look at the bond market, see what's going on here today. Now, right now we're off the just off the 10-day moving average. We're way down about 56 basis points. But don't be scared about that. That's primarily because we had a bond rollover, and which translates to about 34 basis points. So what that really means is that we are actually closer up to this range right here in reality. We have these about once a month, primarily because the bond markets, they close them up, start new pricing, and they package them up, and that's where we get the 30-day pricing on interest rates, where we package them up, they sell them, and that's why you'll see sometimes, and this really is on the rate sheet price, and there's no effect on this. So discount that, but technically we should be right up about this level right here. So a little bit off from where we left off yesterday. We're testing basically a 200-day moving average. We want to stay above that. If you look at the trend line we're seeing here, we're still above where we, still above that. So right now we're still looking pretty good. As we're trending upwards again, as we've been going about 3-4 months. About 4 months or so of downward trend. So now we're starting to see an upward trend. All right, so a little bit worsening in the pricing today, even though we had the bond rollover, but we could get that, within a few days this could be closed up here. All right, folks, you guys have a wonderful day. We'll see you guys tomorrow, and thanks for watching.